Well, let's talk technology right now. We're just showing you Oracle shares higher by about 5%. Software giant Oracle yesterday announcing quarterly earnings that beat Wall Street estimates, but a drop in revenue proves even the strongest feel the pressure of a weak global economy. So what does this say about challenges for the broader tech sector? Well, we put this question to Bill Whyman. He is head of the tech strategy research team at International Strategy and Investment Group, or I.S.I. And Bill has been top ranked by Institutional Investor for his research in technology and telecom, and has also worked at the National Economic Council. And Bill, thanks so much for being with us.
My pleasure. Good morning.
So on the surface, of course, Oracle beating estimates, customers renewing their contracts, but revenue still a bit soft. I mean, what in that report confirmed any trends for you?
Right. Well, I think it goes more to the strength of the Oracle model and resiliency. But when you're looking at broader tech demand questions, we just didn't see, a broad and strong improvement in either the applications business or in the database business. So I think it says more about the strength for Oracle than, unfortunately, about the economy at this point.
Okay, well then what about the broader tech industry? What's going on right now? I mean, what does that tell you about where the economy is?
Right. So what you would expect to see in each of the last three recessions is hardware spending falls sharpest and comes back quickly. So I wouldn't expect to see Oracle be the leader out of here. I'd be looking at that more on straight hardware. What was interesting was Europe was a little stronger for Oracle than I think many expected. It wasn't good, but our broader sense is Europe's very weak. So that was, I think one incremental sign. I think Oracle also had very strong margins, which goes to cost cutting that companies are doing around the globe.
Okay, well, but leaving Oracle for a moment, though, Bill, I mean, tell me in terms of the overall technology industry, I mean, what are you seeing in terms of spending, in terms of investment that tells us that these green shoots that we're seeing in the banking industry may also be reflected in the tech industry and that we are, in fact, seeing a turnaround here in the economy?
Right. So we're starting to see some less bad. You can see that, for example, in semi-capital equipment orders. This morning, the durable goods orders leveled out in tech. I don't think they were great. You can see it in things like global semi-shipments. So under no sense are we seeing good numbers, but similar to the broader economy, we are seeing some numbers that are less bad, and I think that by 2010 should bring us back to growth.
Okay. Well, then can you give us some examples or some samples of companies that you think, as we are getting out of this recession, that are going to benefit or be ahead of the curve? And what are the ones that are going to lag in the technology sector?
I think we're going to see a tale of two techs. I think we're going to see some traditional maturing companies like Intel and IBM, and I think the gains they've experienced are largely the cyclical part of the recovery. As we move forward, I think investors should think about those that have structural growth, names like Adobe, Salesforce, Google, that aren't just benefiting from a cyclical recovery in the economy, but actually have innovation and product cycles driving a better outlook longer term.
And Bill, the way technology stocks have behaved so far in this recession and in this bear market, does it tell you that they're more or less economically sensitive than they were in prior cycles?
Tech is unquestionably more economically sensitive this cycle around. If you look at tech as a percentage of CapEx budgets, we're up to 40–45%. So if CapEx budgets get hit, tech is going to hit. I think the thing that really saved tech and helped tech stocks outperform year to date is the fact that they have much stronger balance sheets than many other parts of the economy. And they just don't have the structural ills that you see in consumer or financial.
No, they don't. And very quickly, Bill, then, has there been any fundamental change that you've seen from this recession to try to withstand, I suppose, successive cycles?
Right. I think the managements have been much more quicker to cut costs and to protect margins going into this recession. So I think they were more responsive this time. And, of course, tech wasn't at the epicenter of this recession.
Okay, Bill, thanks so much for joining us. Bill Whyman of I.S.I. Group's Tech Strategy Research Team joining us about the tech sector, of course.